Hey everyone, welcome back to Corporate Decoder, the place where we dig into the sometimes strange world of corporate filings, where numbers can be twisted and turned to look like almost anything. Today, we are looking at Lottery.com and their recent filing, which is a real gamble, no pun intended. Lottery.com just announced that they've finalized an agreement to buy a company called Spectrum, limited to expand into the international lottery market. They signed an agreement with Plus EVO, the seller, to make it happen. The deal should be closed by the middle of March. Instead of using cash, Lottery.com is paying for Spectrum with its own stock, which is also called payment in kind. The total price is equivalent to $1.5 million, but it's all in restricted stock units of Lottery.com, priced at $3 per share. The payout will be in 5 installments over time. The first payment is $300,000 worth of stock, which is 100,000 shares, and it is happening shortly after the deal closes. These shares can't be sold for 6 months. Plus, the seller gets piggyback registration rights, which means they can jump on any future stock registration Lottery.com does, making it easier for them to sell their shares later. The second payment also includes $300,000 worth of shares, that is 100,000 shares, which will be issued a few months later. These shares also have a restriction period, meaning they can't be sold for a period of 12 months after the original deal closing. The third payment is another $300,000 in stock, again 100,000 shares. These shares have an 18-month lockup period, meaning they can't be sold for a year and a half after the initial closing date. The fourth payment is also $300,000 worth of stock, which is 100,000 shares with a 24-month restriction before they can be sold. The fifth and final payment is $300,000 in Lottery.com stock, also 100,000 shares, but these can't be sold for 30 months after the deal closes. There's a catch that protects the seller. If Lottery.com stock price drops below $3 6 months after any of these payments, the price gets adjusted. Basically, if the stock does poorly, Lottery.com has to issue more shares to make up the difference, keeping the value at that $3 mark. The full details of this deal are in the official agreement, which will be included in Lottery.com's annual report. There's a press release to announce all of this as well. So what does this all mean? Lottery.com is trying to expand internationally without spending cash. They are using their own stock to make the deal happen, which can be good or bad. If the stock does well, great. If not, they have to give away more shares. Paying with stock can dilute the value of existing shares, which isn't great for current investors. On the other hand, if this acquisition really boosts Lottery.com's business, it could be a smart move in the long run. The big risk here is the stock price. If Lottery.com's stock tanks, they end up paying more for Spectrum than they planned. This could put a strain on their finances and potentially discourage investors. It also depends on how well Spectrum performs under Lottery.com's ownership. If the international expansion doesn't go as planned, this whole deal could end up being a costly mistake. Lottery.com's direction here is interesting. They are clearly trying to grow, but they are taking a bit of a gamble by using their stock to do it. Whether this pays off depends on a lot of factors, including their ability to successfully integrate Spectrum, expand internationally, and keep their stock price up. All of those things are hard to do at the same time. In conclusion, this acquisition is a mixed bag. It could be a smart move for Lottery.com if everything goes right, but there are definitely risks involved. Keep an eye on their stock price and how well their international expansion is going to see if this gamble pays off. Thanks for watching. If you found this breakdown helpful, please like, subscribe, and leave a comment below. Let me know what other corporate filings you'd like me to decode.